up, everybody? Nate here, and it is official. The United States Federal Reserve of Atlanta just came out with a brand new report saying that GDP for the United States is actually going to shrink for the second straight quarter, meaning we are officially in a recession. Now, the Federal Reserve and the Federal Reserve of Atlanta have been tracking this for a very long time, and it's important to mention that this is just a prediction about what our economy is going to do in Q2 2022. They don't have the official number yet because the actual Q2 number doesn't come out until the end of July. But as it stands right now, the Federal Reserve continues to lower their expectations for our economy. And today I want to talk about why and what that's going to mean for you and the entire economy as a whole. And if you haven't already, make sure to smash that thumbs up button below, hit that subscribe button, and ring that notification bell too. That way you don't miss any of the daily uploads over here, and I can keep making videos just like this one. Thank you so much for doing that. And now I want to kind of go over the timeline that the Federal Reserve has had in Q2 2022 regarding their expectations for our GDP. So at the beginning of June, the Federal Reserve actually said that our GDP was going to grow. They said that the United States would see GDP growth of around 1.3%, but that was pretty much the highlight as it only went down from there. On June 7th, they actually revised it downward and said the United States economy was only going to grow by 0.9%. Then it got even worse in the month, saying that growth was only going to be 0.3%, and then exactly 0%, so no growth at all. And now we are actually going to shrink by a whole 1% in Q2 2022. So what exactly is going on here? Why have they been flip-flopping so much? What is changing in our economy to cause that? Well, the reason the Federal Reserve has been changing their mind so often is for two main reasons. One is inflation, and the other is consumer spending. Consumer sentiment in the United States at this moment is at an all-time low, and inflation is at an all-time high, meaning consumers are having a really hard time going out and buying things. And also business sentiment for consumers and CEOs is also at an all-time low, so businesses are not able to grow, and that could potentially hurt workers in 2022 and beyond. With consumer sentiment going way down, consumers don't expect to be able to go out and spend a whole bunch of money, so businesses are starting to prepare for that, and they aren't making as many products, meaning there's not going to be as many sales, which means GDP is naturally going to shrink. 70% of our gross domestic product is controlled by consumer spending, so if consumers aren't spending any money, well, then that GDP is also going to shrink. Other side of this coin has everything to do with inflation and the Federal Reserve's interest rate policies. As the Federal Reserve has gotten more aggressive with inflation and more aggressively with their policies, well, the Fed in many parts of the country is starting to price that into the equation of what our economy is going to look like. They believe that consumer spending is going to be so low that demand is basically non-existent in our economy. So with their interest rates going up, they essentially suck all of the demand out of our economy. Americans just aren't able to go out and buy all of the same things that they could in 2020 and in 2021. So things like mortgages and auto loans and credit card spending are naturally going to go down because all of that debt gets a whole lot more expensive. And a lot of Americans are able to qualify for that debt if interest rates are low. But with interest rates going up, millions of Americans are suddenly priced out of markets altogether. As this goes on and on, businesses are going to have a really hard time. They're going to have to stop spending so much, which means they're probably going to have to cut portions of their workforce. And we have started to see that so far in 2022 with a lot of companies having massive layoffs. These are probably going to continue for the foreseeable future because a lot of businesses simply just don't have the capital to keep a lot of the workers that they hired back in 2021. Federal Reserve Chairman Jerome Powell has started to see this, and he says that there is going to be a lot of pain coming for the United States economy as they start to bring inflation down. This is becoming a really bad situation for the Federal Reserve in general because a new study is actually showing that Americans have way too much in savings right now, actually a record amount of savings. So Americans, even though interest rates are going up and demand at their jobs and from their income is starting to decrease, Americans have a ton of money because all of this money was printed back in 2020 and in 2021. At the start of 2020, we had around $3 trillion in circulation. Now we have over 20 trillion. A lot of Americans have held onto that cash, whether it's for an emergency or they just want to go out and spend. And right now, with things getting a lot more expensive, they are depleting their savings accounts. That is still stimulating the economy. meaning the Federal Reserve needs to get even more aggressive with their interest rates for a whole lot longer. It also means that inflation is probably going to continue to stay high in the United States for a little while because we still have a lot of supply chain issues, which is leading to stagflation problems, meaning inflation is going up while our economy is going down. Americans just have nothing to buy even though they have all of the cash in order to buy things. I will say, as the Federal Reserve predicts that we are now in a recession, well, one of two things is going to happen in our economy. If Americans can continue to spend, well, that means the Federal Reserve is going to continue to get aggressive for a long time. The federal funds rate right now is at around 1.5 to 1.75% in the US, and it's probably going to continue to go up in July and in September and at their next meeting after that. This means that demand is going to further be depleted in our economy for all of those things I mentioned before, and less stimulus for everyday Americans. At some point, inflation is going to continue to go up so much that wages and incomes just won't be able to meet it, and Americans just are not going to be spending as much money. Right now, there's $815 billion in American savings accounts, an all-time record, but there is not enough going into those savings accounts in order to match the amount coming out. So what that means for the future of our economy is GDP is probably going to continue to shrink, and it's going to show that quarter after quarter we are in a recession. Eventually though, Americans are going to stop spending money. The stock market and the housing market are also going to be at neutral levels because nobody is putting any additional money in. That means the Federal Reserve has now met its peak. It doesn't have to continue to raise interest rates anymore because Americans are stopping their spending. There is no longer that demand in our economy as interest rates have gone up, and at that point you'll start to see the Federal Reserve loosen a lot of their policies. They have no choice at that point. They have to control our economy. They have to keep inflation at a pretty level point. They don't want inflation to be negative. They don't want inflation to be 0%, so if it's really low, then they're going to allow Americans to go out and spend a lot of money again. But they want to do this in a controlled way so we don't have inflation getting up into the 8 and 9 and 10% again. Basically, once you see the Federal Reserve start to loosen a lot of those policies and backtrack on their stimulus and backtrack on their interest rates, you know the United States is 100% in a recession because demand is basically non-existent for everything. It also means that inflation is starting to come down, so prices can stabilize. The important thing that you need to know about prices, though, is they're probably not going to go way down. Americans make a whole lot more today than they did 2 years ago, so prices are going to stay at their levels that they are now, but more than likely they're not going to continue to go up once the Federal Reserve finally acknowledges that we are in a recession and reverses their policies. At that point, you'll start to see a whole lot of economic activity, and our entire economy will be done with this reset. Everything right now in our economy is resetting. The stock market, commodities and cryptocurrency, and the housing market are going back to levels like we saw 2 and 3 years ago because all of this liquidity and all of this demand are coming out of those markets. Now, things will go back to the way they were once it hits its absolute bottom. But until that happens, it's probably going to continue to get lower. And I don't think we're at the absolute bottom just yet. But now I want to hear from you on this issue. What do you think about the Federal Reserve essentially predicting that the United States is currently in a recession right now? Do you think that we've been in a recession for a very long time? Or do you think that the United States economy is actually going to grow in Q2 2022? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.